Yeah, I think the message that we're getting is that the hardball tactics that the Trump administration and Trump himself have used for the past several weeks aren't working. They're actually having the opposite
Mm.
effect. China is refusing to come to the negotiating table under the duress that the 145% tariffs are putting on their economy. So I think what you're seeing is the Trump administration getting kind of changing gears to some extent and saying, you know what, maybe we need to lighten up a little bit. Let's soften the rhetoric and see if that will work. There are no talks going on right now between the U.S. and China. The Trump administration is negotiating with itself for all intents and
Wow.
purposes because China is saying, this is not the kind of environment where we're going to have conversations. So there'll be a lot of back channeling going on between Trump advisors and Xi Jinping's advisors before a phone call could take place, and some parameters can be laid out for some sort of deal. But as the Treasury Secretary said today, and I believe yesterday, this is going to take years. This is not, if we're talking about a comprehensive trade deal between the world's two largest economies, that's already pretty well interconnected, and we're gonna redo those relationships. It's not going to be done overnight. So we might hear some softer rhetoric in the short term, but this is a long-term story.
What does that softer rhetoric have to look like? Is certainly from the Trump administration for China to say, okay, now we can talk. What
Well,
specifically? Yeah.
I mean, presumably it's got to be more than talk. It's got to be, Trump lowers the tariffs. He says,
Mm.
okay, China, you did what we wanted to on the fentanyl, issue that we put tariffs on you for. So it's got to be some steps out of the essentially the trade blockade that's been going on. This is gonna cause a lot of economic dislocation in China. It
Yeah.
already is, and there's some evidence that the White House is looking at the damage that's happening to the real economy. There are U.S. importers that have basically just stopped ordering anything from China, and they can't get it from anywhere else. So that they have inventories that can kind of buy that they can get through. They can get them through, several weeks or maybe a month or two. But this is gonna the wave of economic disruption is going to hit the U.S. as well. So the issues that are going on in shipping and cargo cancellations are it's just a matter of time before those hit the retailers. The President Trump had a roundtable with Target and Walmart and the big retailers, and the word is that they gave him some views along those lines. So
Okay.
it's not only the bond market and the stock market, but it's the freight market and the real economy.
So let's talk about that a little bit because Ryan Peterson is the CEO of Flexport. He's been on Bloomberg TV in the past. It's the supply chain logistics platform. And he has a tweet out today that's getting quite a bit of attention. He says, in the 3 weeks since the tariffs took effect, ocean container bookings from China to the United States are down over 60% industry wide. When, Brendan, are we going to start to see this happening on store shelves, in the stores that we go to, on the e-commerce platforms that we use? And what exactly is that going to look like?
Yeah, I mean, it will mean companies that are trying to get seasonal products for the summertime, may have trouble doing that and stocking their shelves. Shipping is a seasonal business. You stock your Christmas shelves and inventories after the summer, and so so the cycle is being disrupted, and the other issue. Let's say that the U.S. and China get over their disagreements in the next week or two. They sit down at the negotiating table, tariffs come down, and in the short term, which no one really thinks this is going to happen, but let's just say hypothetically that happens, there's going to be a huge surge in all those orders that were canceled are going to go back in again. So we're going to have a disruption. So it's this
Hmm.
like this bullwhip effect, or this whiplash effect that's that we're set up for. So either way, there is going to be some disruption. Some U.S. importers can turn to Thailand or Vietnam
Right.
or Cambodia, other places in Southeast Asia to get what they need, but they can't get everything they need if China is basically the costs from China have basically doubled given the
Right.
tariffs that the U.S. put on
Brendan,
Chinese imports.
really quickly, 30 seconds here. The codependencies of these two countries, the two biggest economies in the world, still connected, still crucial, or not so much as it was maybe 5 or 10 years ago? Real quickly.
It's still, you know what, the people that we talk to say that, that China's role as the global manufacturer is going to stay big and strong for a long time. It can be diminished to some extent. The U.S. can reshore some of that, but it's not going away anytime soon.